Welcome back. Time for business. And of course, I'm joined by Matthew again. Hello again, Matthew. Now, just 24 hours ago, you were telling us how the markets were reacting pretty well to that news of a bailout for Spain's banks, but they've really done a U-turn, haven't they?
Well, yes, we had, of course, as you say, Claire, that initial rally. It was like a sigh of relief, really, that something had been done about Spain. Then the sentiment started to sour a bit, and we saw both Europe and the US and overnight Asia all closing down. Well, the reason for that is really that there's concern that this bailout is going to put too much pressure on Spain's already strained finances.
The euphoria was short-lived. After a brief bout of market optimism over a €100 billion EU lifeline given to Spanish banks, investor worries kicked in again. Global stock prices fell, as well as the euro.
The financing needs of the Spanish government have increased after this lending because, no matter what we call it, at the end of the day, it means more of a deficit that will need to be refinanced.
The Spanish government has insisted it's not a bailout like the ones for Ireland, Portugal and Greece. It calls it a line of credit extended to banks that the government expects to be paid back. However, the markets are worried the banks, laden with toxic assets, will not be able to repay the money, leaving more debt on the government's books. This at a time when Madrid is struggling to meet the EU's fiscal rules. Spain's budget deficit stood at nearly 9% of GDP last year. It has promised to reduce government spending and bring the debt down to 5.3% this year. The EU is expected to agree to push back the deadline for Spain to meet the 3% target by 1 year. Despite these efforts, many investors doubt if Spain's crippled economy will recover soon without further bailouts.
Something's going to happen sooner or later. We don't have the capability to cope with the problem without some kind of monetary interventions. Without that, it will be very difficult to face the outstanding debt.
These market concerns have pushed Spain's borrowing costs up again. The interest rate for its benchmark 10-year bonds is getting dangerously close to 7%, a level considered to be unsustainable in the long run.
Well, as Yuka was saying in that report there, Spanish borrowing costs have been going up. And yesterday, the yields on Spanish bonds were up at about 6.5%. That's getting high and edging near that 7% level again, which is very worrying. And this morning, we've just heard that the ratings agency Fitch has said that Spain is likely to miss its deficit targets that we also saw in that report, both for this year and for next year as well. Just while we're on bonds, let's not forget Italy, of course. Italy is also an important concern for the Eurozone. Their bonds were also up a bit yesterday. They've got €2 trillion of debt. That's more than any other developed nation other than Greece or Japan.
Now, how are markets opening in Europe this Tuesday?
Well, wouldn't you know it? After all those falls, we're actually seeing some slight increases this morning on the European markets. Let's take a look and see how they're opening up. But just slightly up. But of course, a long day of trading ahead. So let's see what will happen. Now, another important factor for the markets is, of course, Greece. They've got their elections on Sunday. Reuters has been reporting that proposals have been drawn up by EU officials looking at, in a worst-case scenario, what might happen if Greece has to leave the Eurozone, and that includes things like limiting withdrawals from cash points, border checks, introducing capital controls. Important to stress that is a worst-case scenario, and those EU officials were saying they don't expect Greece to leave the Eurozone either. But just to go back to bonds, Greece itself will be in the bond market. They only ever issue very, very short-term bonds. These are 26-week bonds they'll be issuing today, about €1.25 billion worth. Well, while we're on markets as well, let's take a look at the Asian markets, which have all closed now, but they were all trading down at the close overnight. The Nikkei down there just over 1%.
Also down is the price of oil, and that's good news for some, not for others.
Yes, now it's good news, of course, for airlines. It's good news for motorists, businesses as well. It's the producers, really, who don't like, not surprisingly, a low price. And what usually happens when the price drops is they cut their production. That then sends the price back up again. It's now down at around $100 from its high of $128 in March. But what we're hearing is that Saudi Arabia, one of the most important producers, at the meeting of producers, the OPEC producers on Thursday, Thursday, they are going to argue that production should be increased. They don't want to see the price going up. They believe it's bad for the world economy for the price to go up. So that will be an interesting one we'll keep an eye on. Well, let's also get some of the day's company news. And Google here in France has ended a 6-year dispute with French publishers over out-of-print books. Publishers now have the right to make individual deals with Google to have their books digitized. Google said the agreement put France ahead of the rest of the world in bringing out-of-print books back to life.
A vote of confidence in the future by NetJet. The private jet company announced it will buy 425 new aircraft for its fleet of more than 700 jets. The €7.7 billion order will be split between aircraft manufacturers Bombardier and Cessna. The company says the order reflects its confidence in the American economy.
And staying with aviation, European manufacturer Airbus says its A380 planes could be grounded for up to 8 weeks as it works on repairing cracks in the wings. Hairline cracks have appeared on some of the brackets used to link the wing to the plane. The issues cost the company over €250 million.
Now, as we've been hearing, the Spanish banking sector is set to get a multi-billion euro bailout. Banks need the funds to recover from a property boom that went bust. Evidence of that property bubble now lies strewn across the country.
A luxury property development in parkland with swimming pools, playgrounds and tennis courts. What could be nicer? Except that this apartment complex, 45 minutes from the Spanish capital, is little more than a ghost town.
A lot of ghost places like this were built with the loans the banks gave and could not recover. The people could not buy the houses because they were expensive, because the crisis started and the situation is just getting worse.
This mega development was nicknamed Manhattan, but closed 2 years ago as the financial crisis sunk in. Apartments galore are for sale here, and prices are plummeting. More than 13,000 flats were planned, only 5,100 were built. Many people living here believe the EU rescue package for Spanish banks is just another example of double standards.
It's not fair, because if it had happened to a person who has a flat with a loan through Bankia, they would take his apartment. But now the banks haven't done what they were supposed to, so they inject some money to rescue them, and that's what it comes down to.
Such modern-day ghost towns have become a part of the Spanish landscape. Monuments of the country's boom gone bust.
And before we go, Apple has been revving up software developers over new products.
Yes, that's right. Well, yesterday, Claire, we talked about the fact that both Apple and Microsoft are having these conferences, which are all about getting these developers excited and producing new apps for their products. Well, one of the other rumors around was that Apple might be launching its own new mapping device, its new mapping product like the Google Maps product. Well, it has done that. It's called Flyover. Analysts say that it's a way for Apple to increase its dominance over what's on its products.
I don't think we saw anything really revolutionary with Maps today. It's really just the next step in that experience. But more importantly for Apple, they've managed to push Google outside of that experience, and now Apple is in control not only of the Maps experience, but all of the commerce-related opportunities and advertising-related opportunities that are so intimately tied in with location as a key enabler today.
That's all we've got time for, Matthew. Thank you very much for that look at the day's business news, and thank you for watching France 24. Stay tuned.